So the asset for Natgen Investment Trust CO24 is a shopping centre in the regional town of Collie in Western Australia. Now Collie is about 170 kilometres south of Perth and about 50 kilometres inland from Bunbury, which is again south of Perth. The centre is a regional convenience shopping centre which also aligns to the Natgen investment philosophy. As you'll be aware, we have 4 limbs to that. I won't go through them at the moment, but regional convenience shopping is one of them. So you might ask why we go to a place like Collie, which seems a long way from home. Well, it goes back to the investment philosophy and buying well to begin with. So we're scanning the nation constantly looking for good opportunities, and as you can tell from the fact that it's taken us over 12 months to buy something, we're pretty picky about what we choose to buy. So this one came up and it has all the attributes that we're looking for: locational attributes, economic attributes, and of course the timing attribute as well. The centre is anchored by a full-line Woolworths supermarket. It's one of 2 supermarkets in the town, and it's supported by 8 specialties in the centre. The centre is the only air-conditioned mall-style centre in the town. Collie can be quite a hot place too, so being able to be in an air-conditioned centre is a major advantage. So supporting the Woolworths supermarket, we also have a major chain chemist. We've got OPSM, the sunglasses people. Interestingly, we've got a Liquorland there. Now, obviously liquor sales are big in all these type of industrial towns, but Liquorland is actually a Coles brand, and they're actually within the Woolworths supermarket. Why? Because it's the only place you can get drive-through liquor in the town. Beyond that, we have some other minor tenants, and also we have the Western Australian government who have put a jobs and apprenticeship centre here because that's supporting that energy transition that we've been talking about as well. So you'll notice there's a couple of vacancies within the centre. Well, a vacancy is, to my mind, an opportunity because it allows us to build on the tenant mix in a centre. And it also allows us to actually change things, because when you're dealing with commercial property which has longish term leases in place, you can't actually change much until you get a vacancy. In the case of Collie, because we've got 3 vacant areas, 2 of which we've actually bought effectively for nothing, we can actually impact the tenancy mix there as we go forward. The advantage we've got there, of course, is that we've got an air-conditioned mall, which nobody else has, and also we have most of the majors in town are within our centre, so that gives us an opportunity to build on that with the types of things you'd find that go into those places. Like, for example, a mobile phone shop. What mall doesn't have a mobile phone shop? When we take a new asset into a Natgen investment trust, we do a lot of due diligence about what's the return profile is likely to look at. So we look at all the rentals and we look at all the costs of owning a shopping centre, and putting those 2 things together and taking also the debt that we take on into account, we see that the distributions to unit holders forecast to be 8.5% per annum for this year and for next. So the debt provider is likely to be ANZ Bank at this stage, and we look to borrow 50% of the value of the property. So we'll borrow $5 million for this property on a purchase price of $10 million. When comparing a Natgen investment trust with another type of investment asset, it's important to look at the return profile, but also the quality and style of the returns that you're getting. So, for example, if you look at something simple like a bank deposit, people have said to me, you know, we can get 4.5% to 5% in the bank at the moment. Why would we invest in an investment trust like yours? Well, the fact is that 4.5% to 5% is all you're ever going to get if you invest in an interest-bearing account. A Natgen investment trust gives 3 types of possible return. First of all is the income return that you receive year on year, and in fact it's paid monthly. But secondly, there's also tax benefits to that. Because of the nature of property investment, there are amortisation and depreciation benefits, which mean that you don't pay tax on the entirety of your return. In fact, for some years you can pay no tax on your distributions as they're paid. This is outlined in our offer documents, of course. And the third thing is you get the opportunity for possible capital gains as well. And that's something that you'll never get when you put your money in the bank. You're only ever going to get the same amount out. So whilst we can't guarantee capital returns, capital gains, if you look at the property market over the last 1,000 years, the trend has always been up over time in the long term. Obviously there's short-term ups and downs in all markets, but over the medium to long term, commercial property in well-located markets pretty much always goes up in value. And one of the things we look to sort of prove that also is the replacement value of the property. As I mentioned earlier, we've bought the entire centre for $10 million, but we've actually had a fairly conservative replacement value figure given to us of $14 million simply for the buildings, and that doesn't take the land into account at all. So what that basically means is that if anyone was seeking to replace this centre, you'd have to buy the land and pay $14 million. What value is that? It means that our tenants can stay in our centre. Or a new centre, put it this way, the new centre you rent would have to be some 50% higher than our centre, which makes it uncompetitive, and it's always going to be that way for some time. That gives us some real headroom to provide capital growth before there's going to be any competitors in this market. This Collie region also has a very skilled workforce, and one thing that's happening more in the 21st century is that workers don't want to move to jobs. So jobs kind of have to come to people. And if there's that level of massive skill base in that area, they're going to put industries there. So if you add up all the mooted projects in this little confined area of Western Australia, it adds up to many billions of dollars. And that all flows out to the pockets of workers and hopefully flows into Collie Central.